Hi, it's Adam from Orchards Estate Agents, and today we're going over 10 things that first-time buyers need to know. This is a collection of stuff that we've learned over the 18 years of finding thousands of first-time buyers their first home, stuff that works, stuff to avoid, and some general information about products and services that are out there. Now, specifically products and services, be aware interest rates and stuff that I quote as being available now are available as of filming this, but that will change. So just make sure that when you're weighing up your own position, you're speaking to the right people, getting advice from financial services people, and help that's tailored specifically to your situation as well. This is sort of a catch-all, hopefully a little bit of information that will help you. But yeah, let's get started. So point one then is all about capital appreciation. Now that's just an estate agent's way of saying house price growth. Now every area is obviously different, so it's going to be really important that you speak to your local agent and find out what your average house price growth is for your area, but it's something that needs to be considered early on. And something that's so often overlooked. How many times do you hear people say, I would have bought a house by now, but house prices keep going up. Every time I save up enough deposit, I now can't afford the house I want. You know, it's a reoccurring theme. So allow for that when you're doing your planning now, and reap the benefits of that. So to give you an idea, I mean, our locally our average house price growth is about 6 to 8% per year, but obviously you have ups and downs. Some years are bigger than others, but if you account for it now, if you allow for it now, and you overestimate, then okay, great, you've got more money than you had expected, more money than you need, and that's always a good position to be in. If you underestimate it though, at least you've accounted for it. So you won't be a mile away, you wouldn't have thought, or certainly you won't be as far away as if you hadn't have allowed for it in the first place. So in order to keep the maths a little bit simpler, and I'll chuck some calculations up at the side here that are more accurate, but it's compounded, of course. So let's say it's a 5% increase in house price, then you want to buy a house, or you found a house that suits your needs at £250,000. You want to save up a 10% deposit. It's going to take you 3 years to do so. So you've got 3 years to save up £25,000, and that means that you need a 90% loan to value, which at £250,000 is a £225,000 mortgage. Well, by the time you come to buy that house, it won't be £250,000 anymore. Unlikely to be anyway. And if we take the 5% house price growth as our rule of thumb for now, that means that actually it will be more like £290,000. So that means that you need to save £29,000 for your deposit. 4%, pounds more. It's not a small amount, but it's also not drastically different. It can be accounted in for. £4,000 over the course of 3 years is easier to save than to find an extra £4,000 as soon as you need it to buy the house. But then also that's the deposit side. But obviously your loan to value, if you're still only borrowing, you're still borrowing that 90%. That's gone from £225,000 to £261,000. So now actually your affordability is very different. So you want to allow for this at the very beginning, in order to make sure that you're not constantly disappointed when you just start getting close to having that deposit in your bank, and you start looking again and you think, brilliant, right, next year is going to be my year, and all of a sudden everything's gone up, I can't get the mortgage I wanted. Well, take that into account now, work it out now, and then like I say, best case scenario, you've got more money than you need. But this is the only real point that I suppose requires a bit more sit down and chat, and it's probably the longest point in here, but it's certainly something that you need to consider straight from the off. Tip 2. Make your savings plan realistic. You're not going to be able to cut out every expense. So to think you can is setting yourself up to fail. And unfortunately, once you do fail, once you start spending money that you hadn't planned, it's very easy to just sort of throw it all to the wall and forget about it. So so set a realistic plan. You know, stuff like haircuts. I mean, as soon as we come out of lockdown, I desperately need one, but you need to factor those costs in. The odd occasional takeaway and beer when the pubs reopen. You know, these are things that you're going to want to factor in. So make a plan, make it ultra realistic, and then set up the almost like a standing order from your own account straight into wherever you're saving it. And we come on to more sort of saving options further into this video, but make sure it's almost like an outgoing. Day one, as soon as you get paid, goes out of the account into wherever you're saving it, and make it slightly difficult for you to access, bit of an inconvenience, because you know you don't want to make it too easy, otherwise you will dip in. But realistic, achievable targets for the saving. Don't overestimate. Point 3 is really about being more sensible about the choice of first house. Now, everybody has their list, their wants and their requirements, but realistically, remember the first house that you buy is likely to be the house that you spend the least amount of time in. First-time buyers don't tend to be in their house for more than 5 years, and actually on average locally it's more like 3 years, because you grow out of it very quickly. You get used to your environment, and you fill it. You know, I mean, case in point, I bought my first house 3 years ago. I don't know if you can see behind there, but we didn't have that little passenger until 2 months ago. Now the house is absolutely full of toys and prams and, you know, all sorts of stuff that we didn't factor in when we bought that house. So we're going to be moving very soon, and that's, you know, typical first-time buyer story. It doesn't always have to be about having a child. It can be literally about, you know, filling the room that you've got, the space that you've got, and wanting to move on to the next thing, or having a job change, a career change, or a lifestyle change. So remember, it's not always the case that your first house, you know, needs to be perfect. Doesn't mean you need to settle or buy something you don't want to buy, obviously, but it just means, you know, let's prioritize. Maybe getting on the market is more important than getting a house that, you know, is going to last for 10 years. Maybe getting on the market and enjoying some of that capital appreciation mentioned earlier is more important than finding that perfect space. I don't know. Only you do. Tip 4, you want to learn your position. So you're a first-time buyer, not a cash buyer. Well, I say that, most aren't cash buyers, but you are a first-time buyer, you're an unencumbered buyer, you're chain-free. A lot of buyers register with us as, like I say, cash buyers when they're not, and it tends to sort of have a bit of a bumpy start to a relationship if you can't qualify your own position when it comes to offering. So you are a first-time buyer, you're chain-free, you're unencumbered, and one of the things, I suppose, to manage expectations is that somebody isn't just going to give their house away to you because you're a first-time buyer. They're not just going to throw loads of money off the asking price just because you're a first-time buyer, but they may choose you at a slightly less price than they could otherwise get with someone else because of your chain-free position. So that's the bit that you really want to drive home, your flexibility. You know, if you're able to, if you're in rented or living with family or whatever the situation may be, can you be flexible on completion dates? Because obviously the vendor of that one's got to go on and buy somewhere else. They may be somewhere above that, somewhere above that. They may have schools involved and holidays and weddings, and there's, you know, loads of people's personal lives, a big thing that they're doing, and they need to get everybody to line up. And removal from companies and stuff like that, make sure that they can get on those same dates for exchange and completion. So being flexible from the very beginning is a real key point to what you're doing. And like I say, don't walk into an offering situation assuming that because you're a first-time buyer, you're going to get some huge discount, because it's not really the market, certainly locally, that we're in. The market locally, people tend to go on at a price that they expect to achieve. There may be a small amount of negotiation, possibly, but certainly our advice to people is to go on for what you want. Don't try and just be on at a high price and then just wait and see if somebody buys it. It's a waste of everybody's time if you're not going to accept what it's actually worth. So doesn't guarantee a discount, could get you in the front of the line if you use it the right way. So you're proceedable, you're a first-time buyer, unencumbered, flexible on dates. They're your go-to points to try and win a negotiation. Tip 5 is all about where to find your mortgage. Now for me, there are many different reasons why a mortgage broker is better than a comparison site or something like that, but I'll cover just a few here. They have access to products immediately that they want to sell you. If you find a whole of market brokerage, then they are literally whole of market. They get paid to sell you a mortgage product. So they're not interested in wasting their time in getting you a product or allowing you to look at a product that isn't going to work, that isn't going to be suitable. So depending on your situation, for example, some lenders are much better with self-employed people, SA 302s, that sort of stuff. Some lenders are much better with people having gifted deposits. Your broker will point you immediately in the right direction as to which lender is your best bet. A comparison site can't do that. It can't take into account your personal situation because it's only as good as the information that you're putting in there. And let's be honest, the whole point of using comparison websites is to try to save time. So most of the time you sort of vaguely cover your real life scenario on these comparison sites. So find the broker near to you, maybe that's recommended perhaps from someone, but get booked in to go see them and sit down, discuss your needs, what you're hoping to borrow, your income, any circumstances that might be looking to change, and they will give you honest and regulated advice as well. They're highly regulated, so it's not like you're going to be chucked a hard sell. Well, apart from you will find a few that will do that for life insurances and contents and house insurance, but in terms of the actual mortgage advice, it's the best out there. And like I said, they're motivated to find you a mortgage straight away. So yeah, go find a mortgage broker, get registered with them, have an honest conversation. It's far better than relying on comparison websites, and gives you a much better idea of what you're going to be able to borrow. But whilst we're here, lake's frozen. Tip 6, whilst we're on the subject of not relying on websites too heavily, the same applies for portals. Now they're great, don't get me wrong, for being able to get lots of information in one place, be able to type in a postcode or an area that you're interested in, get an idea of available stock, how many houses are on the market at any one given time. That sort of information is brilliant to get from portals, but actually to find the house that you're after, well, too often people phone us up and ask to book a viewing on a property that is already sold or under offer, or they can book a viewing, but it's actually, that they're much further down the line than they otherwise would have been in terms of when they were able to get in. And the reason being is because getting a house on the market isn't an overnight thing. They call us out, call agents out, we go out, we value it,
We normally follow it up with a couple of calls on from there to have a discussion about what they want to do. Maybe they go off and view some houses themselves. They speak to their financial advisor. There's all these things that follow evaluation. We then get asked to go back out and take details. So we turn up, we take details, come back, get those details drafted, make sure the vendor's all okay with them. They are brilliant. Go ahead. We order the window card, the brochure, do the virtual tour, the video, all of that sort of stuff. So from beginning to end, you've got a property that's coming on the market that office full of people who get paid to sell houses for a living knows coming on. We have a mailing list full of people that are registered with them with their precise requirements that they can phone up and say, this house is coming on. As soon as we know that we've got the okay on the drafted details, we can phone them up and tell them it's coming on, it's come on. If you're relying on portals, you're 2-3 weeks behind everyone else, and by the time it comes on, it might be too late. So the best thing to do, to be a real keen buyer, to make sure you're getting every opportunity that's out there, phone up the agents that operate in the areas that you want to buy and get registered. But when you get registered, you've got to commit a bit of time to it yourself. Phone up, go through your requirements properly, your time scale, when you want to be somewhere by. If you don't have a time scale, that's fine, that's no problem. But what's your motivation for the move? What's your motivation for the specifics that you want? Do you want a big garden because you've got dogs? Do you want lots of living accommodation because the number of bedrooms doesn't matter? Do you want more bedrooms but you really want to make sure you get an ensuite as well? Do you need a garage because you want to tinker at home on some projects? There's all these things, and you know what you're looking for, but you've got to make sure that the agents in your area know. And then that way, you'll get called about properties weeks before they come on portals. Any agent worth their salt, that's exactly what they're doing. And that's the biggest difference between online and high street, but that's a different argument. But getting registered with agents is one of the most important things that you can do, and is vastly underestimated. So prepare yourself, get all your answers ready, phone up, set an hour aside to speak to 3 or 4 agents, make sure you've got 10-15 minutes on each to go through your requirements in detail. And I promise you'll find your house. Tip 7, whilst we're out here counting sheep, you want to make sure your money's working for you in your sleep. Sorry for the terrible wordplay there. You want to make sure that you're getting more than just your basic savings interest on any amount that you're saving up that you'll get with your current account. So you want to make sure that you have a look. You may be able to get some good deals with current account linked savings accounts, but they tend to be on smaller values, up to £1,000, £1,200 over the course of a year. So you want to have a look at those sort of deals, but you also want to have a look at long-term savings, easy access savings as well, and you want to make sure that you've got a certain amount of risk versus reward weighed up. You can obviously go ahead and put money in stuff like Fundsmith or Vanguard and get a higher return. I think Fundsmith published figures of about 18% for this year, but obviously the risk is much higher. But there are also government-backed schemes. So you've got NSNI, they've just lowered their interest rates, but they're still government-backed. You've got premium bonds that offer, I think it's about 1.5% currently return on them. But then you've also got lifetime ISAs. So first-time buyers can take out a lifetime ISA, save up to £4,000 a year in it, and get £1,000 top-up from the government. I think it's capped at 4 years, so capped at £4,000. But lifetime ISA, you can get 25% up to £1,000 a year on top of what you're already saving. So make sure your money's working for you. Don't you do all the hard work, and allow your money to do some of it as well. Tip number 8, start working on your credit score now. Do things like registering on your electoral roll, get rid of high interest store cards, pay them down,
Try not to open new accounts whilst you're getting close to an application, and definitely don't withdraw money on credit cards and stuff like that. But there are loads of credit score companies out there that will do stuff free of charge, like Money Saving Expert, Credit Club, stuff like that. Experian have got free of charge services as well. There are stuff that you can pay for and get a little bit more in depth, but definitely make sure you're paying close attention to that. Don't take out loans that you don't need to. Don't open accounts that you don't need to. Clear down high interest accounts. Don't let them get into arrears, especially don't miss payments on any of them. Don't draw out money on your credit card. Get registered with the electoral roll. All of these things can help you significantly. Point 9, and I raise this because I'm actually in the middle of getting a new mortgage myself, so I've just been asked for exactly the same, is all about making sure you have the relevant documents that you're going to need. So it may sound obvious, but stuff like your passport, is it in date? If you haven't got a passport, obviously driving license, bank statements, utility bills and stuff like that, are they all to the same address? Your phone contract, etc. Because you may well have moved around a few times, a couple of rental properties, you may have just moved back in with family to save up that last little bit of deposit. So you want to make sure that everything is to the same address, and quite often that isn't the case. When it comes to your earnings, if you're self-employed, have you got the right amount of self-assessments, your SA 302s? If you're employed, can you provide 3 or 6 months worth of pay slips? If there are bonuses and commissions and stuff like that structured into your pay, can you demonstrate them? Have you got a contract that outlines them, all that sort of stuff? And you want to make sure you get this to your broker or your lender, if you're going directly to the lender, as early on in the process as you can, because obviously they can then let you know if there's something that doesn't quite add up, that's something that they're missing, something that you need to get, something that you need to track down. So get this to them early. So your SA 302 if you're self-employed, your pay slips if you're not, your bank statements as well you're going to need, thank you. You have obviously, like I say, making sure that your utility bills, your driving license, passport, stuff like that is either in date, not expired, and all to the same address. But the last point as well is in regards to a gifted deposit. Now, a lot of people don't think about this, and then it comes up right near the end, and it's a bit of a nightmare, really. So lenders are obviously got a great interest in people who have a gifted deposit, making sure that the person lending the money isn't going to be there, cap in hand, if they end up having to foreclose on you. So when you have a gifted deposit, when you declare your gifted deposit, because I want to know where your deposit's from, you may have to get the person who's lending you the deposit or gifting you the deposit to complete a form, normally specific to that lender, that says that they've got no interest in the property, that if they did foreclose, that they've got no ability to try and claw that back, basically. So you want to make sure, again, you tackle that early on, because normally when it comes to the point where you're about to exchange and you're drawing down funds and stuff like that, if you're then clamoring around to try and satisfy lenders' queries, it can really slow down the process quite late in the day. So you want to try and make sure your mortgage offer's in, you've checked it to make sure that the name's all correct and stuff like that as early as possible in the process, and that's going to suit you best. Point 10, by no means do I want this to become preachy in any way, but it's just about asking for advice, being okay about asking for advice. There are going to be parts of this transaction which probably your go-to source for advice is going to be your parents, and odds are most parents haven't moved for a long time, and if it's not your parents and it's your friends, then realistically everybody's situation is different anyway when it comes to their purchase. Even locally, you can have 2 purchases that go through, and they're nowhere near alike, in terms of the process that they go by, and the difficulties they may experience along the way, and these sort of trials that they have to go through. So use the services that are available for you. You know, financial services that we've discussed in here, estate agents ourselves. You know, this is a big decision for a lot of people, and it's something that they don't do very often. But with us and with our financial advisors and everything else, it's our bread and butter. It's what we do for a living. You know, it's imagine whatever it is that you do for a job. You know, that's our view on moving house, on buying houses. So take, I suppose, solace in the fact that you know that you're not the only first-time buyer, and you're not the only person that perhaps doesn't understand something that's come up on a search, or even what searches are, and you know, and the process in itself. Ask questions. You know, what does exchange mean? After I've exchanged, what happens? How long is there between exchange and completion typically? You know, how long does the process take? Ask questions. And don't be afraid to ask those questions. Quite often we get first-time buyers that I think sort of hide behind not wanting to admit that they may not have experience or knowledge in it, and that's okay to not have ever done it before. You know, there are plenty of people that have never done it before. So let us help you and ask the questions that you need answering, really. So those were our 10 tips for first-time buyers. Hopefully some of it will be helpful for you. Give us a call on 01525 402266 and we can get you registered. Subscribe for more videos as well on the YouTube channel, or email sales@orchards.co.uk and we can get you registered and try and find you a house as quickly as we can. Cheers then, bye.